Thank you very much, everyone. Okay, so before I start, I would like to thank everybody for attending this afternoon's session. I would like to also thank Fan Supermart for inviting me to speak at today's session. Okay, so the title of my presentation is A Bull in a China Shop. Okay, and a story of recovery and reopening. So before we go into the session proper, so let's talk about why did I say that it's a bull in a China shop. So what is the meaning of a bull in a China shop? In essence, it means that you need to be careful in your thinking and you need to be careful in your behavior. Okay, but also why I chose the title of bull in a China shop is also because I am positive about the Chinese market. So in today's session, I will go through some of the China macro indicators of why I think China is in for a rebound, and also I will touch upon what are the key themes that I think are interesting for 2023. Okay? So the key macro indicators. So on this chart here, I have 4 lines here. So the first 2 lines here are essentially what we call the manufacturing PMI. So PMI means Purchasing Manager Index. It's essentially a survey that the government was sent out and asked purchasing managers in the manufacturing industry or the service industry and asking them what do they think of their company prospects over the course of the next few months, whether are they going to be buying more or buying less, what do you think of their prospects. So this survey is sent out to purchasing managers both in the manufacturing industry and the service industry. And how we read this chart is this red line here, which is important line, which is 50. Okay, like when we were in school studying, right? Anything, when you pass the exam, when you pass a test, anything above 50 is good, you pass. Anything below 50 is bad, you fail. So same thing here, same thing here. So anything that's below 50, which is below this red line here, is bad. Right? So we can see this part, I'm sure you know what happened here. This is essentially the COVID-19 virus lockdown. Okay, so everything was bad. So everything is below 50. Okay, but I also want to highlight everybody's attention, bring everybody's attention to December of 2022. Okay, December 2022, that was obviously the end of China's zero COVID policy. And once China's zero COVID policy ends, you can see the PMI numbers starts to go up very nicely. So this is the service PMI and manufacturing PMI. So let's talk about the manufacturing PMI first. You can see manufacturing PMI, is there a rebound? There is obviously a rebound. But the rebound has been rather weak. So why is that so? In essence, it's because China is still a manufacturer for the world, a factory for the world. And if, let's say, US is having a tough time, Europe is having a tough time due to the Russia-Ukraine war, and obviously UK is also having a tough time. If the bulk of the developed market is having a tough time, then you can imagine, right, the demand for Chinese goods is going to be very weak. So that's why for the manufacturing business in China, things are not doing that well. They're okay, rebounding from the lows that we saw during the whole zero COVID policy, but nevertheless, it's being brought down by what's happening in the developed market. However, if you look at the service industry, meaning those in the restaurant business, tourism business, retail business, cinema business, those guys are okay. Because after being locked down in their homes for the last 3 years, once zero COVID policy ended, then they'll go out and shop, watch movie, eat at restaurants. So that's why the service PMI numbers are doing okay, nicely and way above 50. And that is also reflected in the actual numbers. So the previous chart I showed you are PMI survey data. So that, from our perspective as fund managers, right, we use that as leading indicators, indicative of what could happen in the foreseeable future. But this is real data numbers coming through. China retail sales, very nice. After zero COVID policy, you see this dip here? Went up very nicely, right? You can see industrial output also improved and growing roughly about 5%. Okay, so these are retail sales as well as industrial output numbers. So both set of numbers are recovering very nicely after the zero COVID policy ended. Next, let's talk a bit about inflation, right? So there are 4 lines here. The green lines or the teal lines are essentially the US CPI numbers. You can see this US CPI numbers, is it coming down? Yes, it is, but some would say it's not coming down fast enough. So that's why we are still talking about US interest rates being hiked for the next month's meeting. Okay, because it's coming off, but it's not coming off fast enough. But if you look at the pink line and the red line, that is the China's CPI numbers. If you can see from here quite clearly, I don't think there's any inflation scare in China as we speak. And that actually has a lot of implication in terms of policy measures, which brings me to this chart here. So this chart here, a series of lines, but you can see there's a downtrend. So this is actually the benchmark policy rates in China. So on this chart here, I have 5-year prime rate, 7-day repo, 1-year medium-term facilities. In essence, this is essentially what the Chinese central banks are asking their banks to charge their customers. So the point I want to highlight here is, you can see that it's getting cut, right? The bank rates or the policy rates are getting cut. And that is very, very different from what is happening all over the world. US, we are talking about interest rate hikes. Our parts of the world, be it Singapore, Malaysia, Thailand, inflation is still there. So very few governments or very few central banks are willing to cut interest rate. But it's very different in China. China, because there's no inflation scare, so that's why the policy measures available to them are much broader and much wider. So that's why they're able to cut interest rate. And this is also one of the main reasons why I'm also very positive, because China is cutting interest rate. So for those of us who are afraid of the interest rate heights, of interest rate being so high all over the world, then you look to China. Look towards China, whereby they are cutting interest rates as we speak. And they have the latitude and the ability to do so because there's no inflation scare in China. Okay? Moving on, for those of you who are valuation sensitive, so on this chart here, I just want to highlight to everybody, this is the valuation PE or price earning ratio or PER of the China market. Okay, I've extended this all the way until 2018. Right? So I can also share with you, during this period, this is the COVID lows. Right? I'm sure all of you at that point in time will say, I wish I would have invested into China at that point in time during the COVID lows, which was in the April of 2020. Right? If I invested then the market would rally, I would have made a lot of money. But guess what, right? For those of you who wish that scenario to happen, guess what? It's actually happening now. If you look at the valuation, look at the valuation of China market. It's actually at COVID low as we speak today. So I want to point out this very important aspect of the valuation to everyone here today. Is if you look at the lows during the COVID, right, which was in April 2020. In April 2020, for those of you who can remember, we were all running around trying to find toilet paper, trying to find masks. We don't even know whether we will live as mankind or not, because there's no vaccination, no nothing, right? Right? That was the point of maximum panic. And yet, at this precise moment in China right now, right, the valuation is as such. The valuation is as low as it was during the COVID period. So for those of you who are valuation sensitive, who want to buy cheap and good stuff, I'm sure all of us here wants to do that, then I would urge you to look at China, because valuation, like I said, is as low as what it was during the COVID crisis. And right now, I don't think all of us are worried about trying to find toilet paper, worried about vaccination. All of us have got multiple doses of vaccination already. We're not worried about whether we can survive until next year or not, right? Unlike during the COVID crisis. So that's why I think it's very different, and yet valuation is as cheap. Okay? Next, we move very quickly on this chart here. Okay? I know if you look at the market, it's very depressing, market's not great and all that, but I just want to highlight to everybody the reality. Don't look at the market, but look at the reality. So on this chart here, I highlight to everybody the GDP growth of different countries all over the world. Okay? The last 3 rows, right? The last three rows, US, Europe, and UK. I want everybody to look at the last column, 2023, the last 3 rows. You can see US, 1.6% GDP growth this year, Europe, 0.6, UK, minus 0.3. So these numbers are from IMF, International Monetary Fund, right? So even by their independent estimates, the developed market is not doing well at all, right? But in the real world, the world that we are living in, I urge you to look at the other columns. China, for example. What is China's GDP growth this year? IMF is saying 5.2. 5.2, I think, is decent, right? 5.2 in times like this, when the developed market is in trouble, 5.2, I think, is decent. Look at our parts of the world, which is in green. Malaysia, Thailand, Philippines, Indonesia, India. Are we doing okay? We're doing okay. 4 plus or 8, about 6%, right? And that is obviously quite decent relative to the developed market. Okay? But if you look at other parts of Asia, Japan, Korea, Australia, and Singapore, okay, we are on average halfway in between now. Not as bad as the developed market, not as good as the rest of Asia. Right? Because in this kind of economies like Singapore, Korea, Japan, we are also dependent on the developed world. So that's why our GDP growth is somewhere in between. Okay? So this is the real world. For those of you who look at the stock market and feels depressed, I will urge you to come back to the real world. Okay? Next. Okay, I would like to touch on some of the key themes. Okay? Some of the key themes that I think are interesting for 2023. Okay? So I'm sure everybody knows who this guy is, right? Ma Yun, right? Jack Ma. Right? This picture, I took this picture from the headlines 3rd of November 2020, about 2 years ago. That was when Ant IPO was yanked at the last minute, right? Mai Jingkong was yanked at the last minute. And that was the start of the trouble in China. Tencent, Baba, the whole lot, right? It's not just Ma Yun, everybody, all the internet tycoons all got into trouble. So that was the start of all the troubles that we saw in the Chinese internet sector. But now, in 2023, things are very, very different. I would say it's 180 degrees different. Okay, this is another headline, but this is from, you look at the date, you might not be able to see the date, it's from 16 December 2022. So just last year, December of last year. So this one from South China Morning Post, what this essentially is saying is China is saying that, China government, central government is saying that, through the newspaper, is saying that they think that they should support the big tech company because big tech company supports unemployment, they should support the digital economy. So from my perspective, right, this really is a sign that there is a massive, massive change from the strict regulatory tightening that we saw in 2020 during the Ma Yun crackdown. And next, I'll show you this chart again. So this one came from Reuters, this picture. So this gentleman here is Ma Yun again. So this picture is very valuable. Why? Because this is the first time Ma Yun actually appeared after all that trouble. First time. You can see how relaxed he is. One arm behind the chair, or drinking coffee. So this is China. I'm sure this is post lah. Huh? Maybe they all don't know each other. I don't know lah, frankly speaking. But this one, it shows that he is relaxed. And that is also reflective of the mood, right? So this one, it was in the press, in the China press. And you look at the date, 27th of March 2023. So just a few months back. Right? So when I saw this, I think it further confirmed my view that the Chinese internet crackdown has ended because Ma Yun can appear in China and can appear on the Chinese newspaper. So all is forgiven. We can move on now. Right? And the best part is, these headlines, CNBC, because I don't want to say Keylong, we just only use the Chinese newspaper, CNBC. Okay, CNBC, 30th of March 2023. So just essentially 3 days after this picture appeared, 3 days after this picture appeared, we have this. Alibaba share price saw 15% because of the reorg. So those of you who are keen China watchers, you would know. Alibaba share price saw 15% because there was a reorg. It's going to divide into 6 entities and they're going to list these 6 entities. And because of that, investors like ourselves think it's a great idea because it actually realizes the value of Alibaba, right? It's short 15%. We're not talking about small kucing kurat, small little stock that can be goreng, This is Alibaba. Up 15% in one single trading session, right? So I do think once again, right, I think that's how powerful this change is. Essentially 180 degrees change from the crackdown that we saw in 2020. Now in 2023, things are changing. And why I want to highlight Chinese internet sector is this. Because the entire Chinese equity market, roughly speaking, 35% of the entire equity market is the Chinese internet sector. So for the China market to do well, Chinese internet sector needs to do well because it's roughly 1/3 of the market. At its peak, it was more than 45% of the market. So there's a long way to go. So I think if there is change, there is recovery, right? All these things are all happening within the last few months. Okay? So we look at the dates, and move on. But the other thing that I'm playing is also the reopening story. So this chart here, you can see, I'm not sure whether you can see this line here, but this is the historical trends of China international passengers. Pre-COVID, I can imagine COVID, dropped like a rock, right? This is where we are now. I don't think you can see those. I'm sure those guys behind can't even see this, right? The whole point of me showing this chart is this: the scope for recovery is huge. It's huge. So that's why for our portfolio, for our fund, we are playing this. Because our view is that the scope for improvement is massive. And I want to show this chart as well. So this is the Macau daily gaming revenue, right? Pre-COVID, you can see this. This is where we are during the last Chinese New Year. Last Chinese New Year, you can see the scope for improvement is massive, right? So this is a few charts I want to show everybody to explain why we are positive on the reopening story and how we are taking advantage of that. Okay, next. The other theme that we are playing is also the China localization story. I'm sure all of you are well aware of the US-China tensions, all the restrictions that the Americans have put on the Chinese tech sector. So this is a sector that we are playing. We are embracing this US-China tension. I don't think for the foreseeable future they can become friends, right? So each of them will take their own path, right? And that's how we are playing. So we know who are the big boys in the Western sector. We know who the Intels, the Qualcomms, and all of that. But for the Chinese tech sector, who are the Intel, who are the Qualcomms? I think we yet to see who are these guys because they are still in its infancy, right? So that's why, in my perspective, then that's our job, to try to find who are the future Chinese Intel, the apples of the world, right? So right now, on this chart here, just to share with you, so this is China's total chip consumption, right? The domestic supply is only roughly about 25%. And because of the US restriction, this percentage will have to go up for sure, right? So this is a theme that we are playing quite actively in our portfolios as well. Okay, next, we like the renewable sector. We like the EV sector, we like the renewable sector. The main reason is because of this chart here. Okay, on this chart here, you can see, right now, roughly speaking, about 16%, 18% of China's energy needs are satisfied by the renewable sector. Right? China has a policy to be carbon neutral by 2060. So for them to hit that target, roughly speaking, about 3/4 of their energy needs to be from the renewable resources. So we have a long, long way to go. And that's good news for people like me, because this is a structural growth story. This is something that I can play because all the way from now till 2060, this is the path. The path is bright, right? So this is something that I really, really like. And moving on, I can also show you some of the data that we have here. So this is solar and wind energy installation over the course of the last few years. You can see massive, massive, massive installation happening within the last few years. Okay? And then what is also good is, in terms of the EV sector, I'm very positive on the Chinese EV sector. For those of you who have EV car, I'm not sure whether you're aware, the total cost of an EV car, right? The cost of an EV car, roughly speaking, 40% of the cost of an EV car comes from the battery. 40% comes from the battery, right? So this shows you how important the battery is to the overall EV cost. And guess what? On this chart, I have the EV market share globally. And we look at who is the biggest player here. CATL, obviously a Chinese company, LG Chem, Korean, Panasonic, Japanese, BYD, obviously Chinese, and then the Koreans as well. So why I like EV sector is because the battery guys are all in these parts of the world. And of the top 5, 2 of them are actually the Chinese. Right? So imagine, like I said, right, if a battery EV vehicle, 40% of the EV vehicle is from the battery, shouldn't you buy the battery guys, right? Because some people always ask me, hey, should you just buy the EV OEM? Should you buy the Tesla, NIO, Li Auto? But the point is, I don't know whether all of you will buy Tesla or NIO or Li or Mitsubishi or BMW or Mercedes. I don't know. Right? You all might like the look of a BMW, some people might like the look of a Mercedes. But at the end of the day, if inside all these cars, it comes from the same manufacturers, then I might as well go and buy the battery makers, right? Right? So this is one of the main reasons why we are very positive on the Chinese EV battery makers. Okay? Next, from the Chinese perspective, you can see there was a massive uptick. There's a massive rush on the part of the Chinese consumers to buy EV vehicles or electric vehicles late 2022. The reason behind this is because there was tax credits that was going to end in early 2023. So 1st of January 2023, the tax credit is going to end. So if you want to buy an EV vehicle, what do? You buy before 31st of December to take advantage of the tax credit. And you see massive, massive uptick in EV consumption. And the Chinese government is obviously aware of that. So what? And you look at the news date, right? It's 2nd of June 2023. So just a few weeks ago. So the Chinese government came out and said they're going to extend the tax credit all the way until 2027. 2027. And this news just came out. And that also reinforces our view on why we are positive on the Chinese internet, on Chinese EV sector. Because from the policy perspective, from the tax perspective, the Chinese government are pushing, right, the EV sector, right? And therefore, our view, battery guys will do well. The EV manufacturers will do well as well because of the tax incentive, like we showed in the chart earlier. Got a massive uptick in terms of EV sales. Okay? Moving on, I want to touch very, very quickly on the Chinese property sector. So I'm sure all of you are well aware of the problems that the Chinese property sector had over the course of the last 18 months or so. So I won't talk about that. But I do want to highlight to everybody this part here. This part here. So this chart here, 3 lines. The white line is the price of newly built buildings, residential building in China in first-tier cities. Okay? The orange line is second-tier cities, and then the green line is third-tier cities. Okay, of course, over the course of the last few months, you can see prices all coming down because things are bad. But I want you to notice this part here. This part here, you can see very clearly that things are changing, at least on the price level. The prices in third-tier, second-tier, and first-tier cities are bottoming, right? Even though it's still coming down because we're still in a negative territory, but it's less bad now. And it's across the board for all the different cities. So it's not just one cities, but across the first, second, and third-tier cities. So what does it tell me? So for me as an investor, right, at least from a pricing perspective, which is more sensitive, I do think that we have seen the bottom. Okay? And for those of you who might have seen data that says that, oh, Chinese property transaction is down. So that's bad. So I just want to highlight to you, if you look at this chart here, right, I would argue that it depends on who you ask. Depending on which company that you ask. So these are the companies, Chinese property companies that we monitor, my team monitors, right? So the data is actually comparing the sales, actual sales, from January to April of 2023 versus January to April of 2022, last year. Okay, we compare these 2 periods, right? And let's not talk about the color first, but let's talk about here. So if you ask these guys who work for INF, Logan, Sunex, Shimao, you ask them, hey, how's business this year? They'll say, horrible, man. I think my company is going to shut up already. Because Their sales are halving. Half of their sales. But on the other hand, if you ask these guys, USU, Evergrande, CRLand, Collie, Greentown, Jingmao, Longfor, you ask them, how's business this year? They say, excellent. I'm doubling my sales. Right? So I'm sure all of you have seen data that says that Chinese property sales are bad. But I would urge you to look at the story underneath the data that's being published by the papers. You ask these guys, you think they think that Chinese property market is bad? I don't think so. Right? And now you notice the colors, right? So the orange colors are actually private property developer, privately owned. Okay? The green bars are companies that are owned by SOE, state-owned enterprise. Essentially has linkages back to central government or to provincial government. Okay? Then the green ones are what we call quasi-SOE lah. Owned but somewhat owned lah. Okay? You can see very clearly, the Chinese people knows and understand this completely. If you are owned by the SOE, I will buy from you. You can see. Or the SOE developers are doing very, very well. Quasi-SOE developers are also doing very, very well. So they are making that distinction. If you're a private developer, if you're a small private developer, you are in trouble. I won't buy from you. Even if you cut price, I don't buy from you because I don't know whether you get my property or not. But if you're owned by the government, that's another story because I know. Right behind you is Xi Jinping. I will get my property one. So you see, they are doubling their sales. So I want to urge everybody to not look at all the TikTok, right? All your Douyin, and then believe everything you say lah, huh? Right? So you need to look at the underlying data because bad news sells ma. Bad news will always 点赞 ma, right or not? Right? You put the 小红星, right? So, but if it's good news, boring, right? Because it's human nature. But I just want to highlight to you, so that's why I want to highlight to you that the story is not so simple lah. Okay? The good guys, the guys who are doing well, who are well supported, are doing well in China. Okay? But the overall data will be weak because these guys only roughly constitute 30 to 40% of the market. These guys, the private guys, right, constitute 60% of the market and they're not doing well. Okay? Next, we move on. The best part is the Chinese government is well aware of that, so they are also pushing forward new property measures. This news came out very early as well, 2nd of June, just a few weeks ago. Chinese government is coming out with a whole host of measures to support the demand. So we are not just talking about loosening of the restriction, but we are talking about supporting demand in terms of cutting the down payment, cutting interest rate, which I showed everybody earlier. Okay? Next, I'm also very positive on the SOE, which is the state-owned enterprise. So state-owned enterprise reform has been talked about for years and years and years. Right? But I think this year, it's a bit different. Xi Jinping came out very, very strongly and talked about reforms. And he set to this SOE enterprise management very, very serious targets. Right? So we are hearing not just from one, but we are hearing from multiple SOE, senior management at CEO level, at chairman level, that Zhongyang or central government is for real. And we are hearing this across different industries. So that's why my view is that I think for the first time in probably 15 years that I'm starting to take an interest in the SOE sector. Because I think time is right for change in the SOE sector. So that's why we are very positive here as well. Or starting to get more and more positive here as well. Okay? And also very quickly, I can't have a China presentation without talking about US-China tension, right? Right? So this is a picture of Blinken going to China and shaking hands with Xi Jinping. So I'm not sure whether you all know the story, right? He was supposed to go during the Chinese New Year period. Then the balloon incident happened. The balloon burst and then so did the meeting, right? So it didn't happen. So it's only very recently in June of 2023, then they met for the first time, right? And not sure whether you're aware, this meeting almost didn't happen. News came out at 3 p.m. on the day Blinken was supposed to leave. 4:30, they said, 4:30 he gets to shake hands with Xi Jinping. Yeah, the market rallied, right? So about 6 o'clock, then he left China, right? So meeting was slotted in last minute, very, very last minute. Okay, so there's a lot of things that came out from this meeting, but I just want to highlight two key points, right? Two key points. And once again, you will notice, right? I took the American newspaper. Because if not, then you'll say I Kelong, right? So you look at the American newspaper, this is what CNN said. Blinken touts progress made in highly anticipated Beijing meetings. And the last part from Forbes is even more interesting. Blinken tells Xi Jinping, US does not support Taiwan independence, right? I'm sure that will take a lot of you by surprise because, why is he saying that? Right? The reason is because this is the official policy. You will hear a lot of news on your TikTok. Once again, I blame TikTok. TikTok, Douyin, social media, right? All of them, right? All of them saying, oh, wow, US going to attack Taiwan. Oh, no, rather, China going to attack Taiwan because US is going to go there or whatever nonsense, right? But the truth is, so Blinken is the Secretary of State, which in our terms, right, he's the foreign minister. He's the foreign minister. The foreign minister of US already says, we do not recognize Taiwan independence. And yet there's so much noise going on, right? Because this is the politics in the US. So I just want everybody, once again, look at your TikTok, look at your Douyin, but you all need to understand that the foreign minister says, do not recognize. But the politics of US is as such that they will talk, especially this year. Why is it important this year? Because presidential election is next year. Everybody is fighting to be the presidential candidate. And the only thing that Americans can agree on is they hate China, right? Right? So that's why we have all these noises all coming through. Right? So I just want to put everything in perspective. And also more importantly, very quickly, I just want to touch on the fact that the Chinese government is not also sitting down and not doing anything because they are doing their best in order to mend relations with the world. For 3 years, they've stuck in Beijing, cannot do anything. But now, things are different. So they brokered the deal, the peace deal between Saudi and Iran. And by right, in most instances, the guy in the center should be a white guy one from America. But this time around, it's different. Right? So you can see China's independence of I guess, China growing in influence of the world, right? They are not fighting US directly, but they are going around them, right? Okay, last but not least, just want to show this chart. I'm sure all of you are well aware. The renminbi is trying to become more important. I'm not trying to say that US dollar is not important. It will always be important one. 80% or 85% of the US, all the trade in the world is all US dollar. China is roughly only 5%. So even if it double from 5 to 10, it's a big thing. But it's still 10%, right? So I'm not trying to say it will take over the world. It will not. But US, at the margin, will become less important, or rather less dominant. Not less important, less dominant, right? But China will also grow in terms of influence. Okay? With that, I've come to the end of my prepared remarks. Thank you very much. Thank you everybody for your time and attention. Thank you.